In 1960, the average OPEC crude oil price per barrel was only $1.63. After numerous ups and downs, it has grown manifold. In 2024, the average price of oil per barrel is $81.98. So now, have you ever wondered why the price of crude oil, the lifeblood of our global economy, jumps up and down without warning? One day it's calm, the next a news headline skyrockets prices. What's going on behind these price swings? The answer lies in a complex dance of geopolitics and economic events. Let's dive straight into how geopolitics can turn the oil market upside down. When you think of crude oil, think of it as the world's most powerful commodity, influenced not just by supply and demand but by international conflicts and power struggles. For instance, in 2022, the US imposed sanctions on Russian oil after the invasion of Ukraine. This move alone sent shockwaves through the market. Russia is one of the top oil producers, and cutting off its supply caused an immediate spike in global prices. The same story repeats itself throughout history. The Arab oil embargo of the 1970s, conflicts in Iraq, and civil wars in Libya all led to significant disruptions in oil production, resulting in price surges as supply dwindled. But why does this happen? It's simple economics. When there's less oil available, prices go up. But it's not just the actual disruption of supply that matters. It's also the fear of disruption. Here's where market sentiment comes into play. Imagine you're a trader on Wall Street and you hear news of rising tensions between Iran and the US. You know, Iran controls a key choke point for global oil shipping, the Strait of Hormuz. Even if no actual conflict breaks out, the threat of conflict is enough to make traders nervous. This fear leads to what's known as a risk premium, an extra boost in oil prices due to perceived risks. It's like an insurance policy for the uncertainty of tomorrow's headlines. The anticipation of supply issues often leads to a sudden price jump. However, these spikes are frequently short-lived. Take the 9/11 attacks or the Russian invasion of Ukraine. Initially, prices soared, but they eventually stabilized as markets adjusted and found new ways to meet demand. While geopolitics can cause immediate and dramatic price changes, economic events shape oil prices in more fundamental ways. When the global economy is booming, industries ramp up production, more goods are shipped, and people travel more. This increased activity pushes up the demand for oil, which naturally drives prices higher. On the flip side, during economic downturns, demand plummets. Remember the COVID-19 pandemic? Lockdowns around the world brought travel and industrial activity to a screeching halt, leading to a historic drop in oil prices. In fact, at one point, prices even turned negative. Producers were paying to offload excess oil. It demonstrates how linked oil prices are to the global economy's health. When economic growth slows, oil demand contracts and prices fall. This connection makes oil a reliable indicator of broader economic trends. Now, let's talk about speculation. Often seen as the wild card in the oil market, speculative trading can amplify price movements caused by geopolitical events, adding more volatility to an already unpredictable market. Finally, we can't talk about crude oil prices without mentioning OPEC+, the coalition of oil-producing countries led by Saudi Arabia and Russia. This group has a significant influence on the global oil supply. In times of geopolitical instability, OPEC Plus often steps in, adjusting production levels to stabilize prices. For example, when tensions flare and supply becomes uncertain, OPEC Plus might decide to cut production, supporting higher prices by reducing the available supply. These strategic moves help the organization maintain control over the market, even amid unpredictable geopolitical events. But it's a double-edged sword. If OPEC Plus cuts production, it can stifle economic growth, leading to a decrease in demand and eventually lower prices. It's a delicate balance, and the decisions made by this small group of nations can impact economies and consumers worldwide. So what's the takeaway here? The world of crude oil pricing is a complex interplay of geopolitics, economic forces, market sentiment, and strategic decisions by powerful groups like OPEC Plus. Understanding these dynamics is crucial for anyone looking to navigate the volatile world of oil markets. It's not just about what's happening today, but also about anticipating how nations, traders, and organizations will react to the uncertainties of tomorrow. Next time you see oil prices making headlines, you'll know there's the much bigger story playing out beneath the surface. If you found this video insightful, don't forget to like, share, and subscribe for more in-depth analysis of the factors shaping our world. Thanks for watching, and we'll see you in the next one.